Okay, so guys, I think we can start the session today, right? So today, guys, we are going to start off by discussing a past paper on ratios. Okay, so can you guys please take the heading in your book as this way? So guys, I'm going to do a past paper that goes by the name Bun Corporation. Okay, in your latest exam kit, okay, in your latest exam kit, can you guys little bit check and see guys this question? I'll tell you the question number, guys, what we're doing over there. 1 minute. Right. So guys, in the latest exam kit, when you move to the ratio section, this is the very first question that you have. Okay, question number, guys, what you can say 439. Can all of you all guys go to that question, right? Those who have the past papers with you all, or maybe the revision kit with you all, guys, can you go to question number 439, page number 157? Okay, question number 439, page number 157. Right. So when you move to ratio section in your paper, this is going to be the very first question that you're going to get. All good? Right. Please search, guys, for the question that goes by the name Bun Corporation. So remember, guys, this Bun Corporation question is a single entity financial statement. So one company, they have given you ratios and they want you to now evaluate the question. Okay. Right. So I will, guys, give you all time to go through this question, guys, over here. Right. First, let's look at the requirements. Let's see what they're asking over here. Right. Okay, guys, required A part. Adjust for information in note number 3. Right. Now, guys, when you do ratio past papers, always go to the requirement. Now, there are some past papers that say, you know what, directly calculate ratios. So when they directly ask you to calculate ratios, guys, you don't need to do any changes. That means whatever the figures that they give, you can take and start calculating. But then, guys, on the other hand, there is some papers that go by like this. Here, can you see, guys, over there? It says, what does it say, guys, over there? It says adjust for information. So that means there are some certain changes that we have to do. All good? Right. So adjust for information in note number 3. So first of all, guys, they want you to, adjust a small piece of information. After you do that part, you're free to, what you can say, calculate your ratios. Okay. Adjust for note number 3. Okay. Now, guys, all of you have put the heading now, right? What is the question number? 439. Question's name is Bun Corporation. Right. Now, guys, can you quickly look at adjustment number 3, guys, for me faster? Okay. This is only adjustment number 3. This part over here. Okay. This is only adjustment number 3. This one. Okay. I'll tell you guys what to do. Can you please read that paragraph and try to get me the stock loss, guys, faster? Okay. Please go through this paragraph, guys, over here and try to get me what is going to be the stock loss. Okay, right, calculate that one, guys, quickly over there. Right, please calculate for me the stock loss. Right, read adjustment number 3. I'll give you all, guys, around 2 to 3 minutes. Can you quickly calculate and show me stock loss for this question? Right, adjustment number 3. Because I want you to find the loss that we are facing in that paragraph. That's it. I'll tell you what to do after that. Just get me the stock loss with it. How much of a loss are we facing over here? Yeah, very good, Rishma. That's the correct answer. Good. Okay, right now, guys, the other students who are facing some issues with the stock loss area. Now, guys, let me explain how you are going to get that answer. Okay, now, guys, look at what's happening here. Right. In January 2008, it was decided to discount some slow moving seasonal inventory which had a selling price of what you can say, guys, 1.5 million. Under normal circumstances, these products have a gross profit margin of 20%. So, guys, first what we should do is this. Okay, right? Profit is equal to selling price minus cost. Okay, so they are telling, guys, normal gross profit margin is 20%. Normal selling price is what you can say, guys, 1.5 million. That's your normal selling price. All okay? Right. Right. Then, guys, on the other hand, okay, now, guys, when you look at this, what is happening now? Profit is, guys, 20% of selling price. Now, can you see here, guys? Gross profit margin is 20%. So, guys, on selling price, when you see 20%, guys, profit will then become 300. Okay, how did I get 300, guys? 1500, 20%. So selling price will become, guys, 1500. So therefore, guys, if selling price is 1500 and profit is 300, means what should be the cost in that case? Cost has to be 1200. Correct. So let's get the cost first. Now, once you get the cost, what they are telling, the inventory was sold for 50% of what it had cost one to produce. So, guys, what happened is this. For us to produce, it cost us 1.2 million. The paper says we are only able to sell it for 50% of that. That means you're only able to sell it for how much? 600 only you're able to sell. So, guys, if you're able to sell for half the price, that means you're facing a stock loss of 600,000. Correct or wrong? 600,000, guys. We are facing a stock loss. Right. So, therefore, guys, can you quickly write down the double entry, guys, for me over here? So then what will happen? Cost of sale will become debit. Inventory will become credit. This is your answer. Okay. Right. Cost of sale will become debit and inventory account will become credit. Right. Okay, now, guys, what we should do, this answer what we have here, now what is the examiner telling? Adjust for this. Adjust for this means the numbers that are getting affected with the stock loss now has to be adjusted, right? So first thing, guys, paper very clearly says, read Roman number 3 or number 3, calculate your loss. So once we calculate your loss, guys, now what we should do, we should now start adjusting these on our financial statement. So 600,000 loss. So, guys, what's the double entry? Cost of sale will become debit because it's an expense and our inventory account will become credit. Right now, guys, let me go for the previous page now. Okay. Right. Now, guys, listen, you have to ask yourself, when I do this adjustment, what are the areas that will get adjusted. Okay, now guys, look at the screen carefully. Now this is the first question what we are doing, right? Now every week we will be doing question after question, right? Target is to cover at least 8 questions before the exam. We are trying to reach 10. We'll see. Okay, so anyway, now guys, what is a double entry that says cost of sale debit? Cost of sale debit means first I should go and add to my cost of sale 600,000 because now loss is increasing, expense. And inventory becomes credit. Inventory becomes credit means inventory is reducing. Now usually this is the mistake that students do. First they do this and they stop. Guys, you have to also see the domino effect that this is causing. Look at this. When cost of sale is going up by 600, what will happen to your gross profit? Gross profit will go down by 600. Then this you have to adjust. Now think, if gross profit is going down by 600, operating expense won't get affected, but profit from operations will get affected. What will happen to that one, guys? That also will reduce. When gross profit goes down, operating profit also goes down. So like this, you have to see when I adjust something, what are the other effects that it's causing. Right, let's move to down part. Non-current asset doesn't get affected. Inventory already adjusted. Equity share doesn't get affected. Revaluation doesn't get affected. Guys, what about retained earnings? Yes or no? Yes. Why retained earnings? When profit is going down, retained earning also will get adjusted this way. So these are things, guys, that you need to do in this paper. You get your stock loss, know the double entry, and first you do the double entry. Cost of sale plus inventory minus. Then when cost of sale is going up, the other areas of the paper also, guys, what you can say, will get affected one by one. All are now okay with that part? Right. So guys, now what I'm going to do is I'm going to send a screenshot of this, guys, to our group. Right. So then you know, right, these are the adjustments that have taken place. Okay. Right. Now guys, again, going back to the question paper, right, what happened over there. Now what they are telling one more time, see, adjust for information in note number 3. Now that only we did now. And calculate 2007 sector average equivalent ratios. What does that mean? Guys, let me go to the first page. Look at this. Now, in this business, sector average ratios have been given. So now the examiner is telling you look at these ratios and calculate the same thing for one corporation. That's what they're asking you to do. Are you guys clear with the question? A part, adjust for note number 3. Now that's done, no? And calculate equivalent ratios. What is equivalent ratio? Whatever they calculated, now you have to calculate and show for one corporation. All good? Okay. Now guys, let's start then over there. First, let's start writing the equations down, guys, one by one. So guys, I'm going to do this on an MS Word. Right? The reason, guys, why MS Word? Because remember, in your exam, you will be getting a blank spreadsheet software, right? So next week I will start doing using that. Okay, today I didn't get the access to the account, right? So I'll start doing it from next week. Okay, now guys, let's start then. Okay, so put the heading, question number 439. Guys, 1 minute, let me connect this to this one. Okay, right, let's start, guys. So 439 question, right? Question name, one corporation, right? Requirement A. Okay, right, let's start, guys. Requirement A. So they are asking you to calculate sector equivalent ratios. Okay, they are asking you to calculate sector equivalent ratios. Okay, so sector equivalent ratios means, guys, these ratios. Okay, right. Give me a minute. Okay, all good, guys. Let's start then. Okay, so first one, guys, they want ROCE. Okay, first one, guys, they want ROCE. Right. Okay, let's start writing the equation for ROCE. Right, what's the equation, guys, for ROCE? So right, so it is operating profit divided by capital employed, okay, into 100. Okay, no? Right. Okay, then, guys, what they're asking, operating profit margin, they're asking. Okay, right. Operating profit margin. Right. What's the equation, guys, for that one? Right. Operating profit, divide the whole thing by, okay, revenue and that into 100. Okay, now guys, I think there was a small issue with the link, no, today morning, if I'm not wrong. Let me little bit check. Okay, so now the students who joined the class a little later, right? Now don't worry. Now you must be first thinking, okay, what is happening in today's class? What is the lesson we are doing? What is the adjustment? Now don't worry about all of those. Okay. Now those who got late to join the class, it's not your fault, no, right? Okay. You copy what's on the screen. Understood? Now I'm writing some ratios. No, you copy it down. I will quickly give a recap of what happened in the question. All good, so don't worry about that part. You just do what I'm doing now. I will explain how I got these answers and everything. All good, so don't worry about that. Okay, let's start, guys, doing it faster. Right, operating profit. Okay, next one, guys, what do they want? Net asset turnover. Right, start writing the equation, guys, for that one. Right, net asset turnover. Okay, please write the equation. Right, what's the equation, guys, for net asset turnover? Normally we have revenue divided by what? Capital employed. Okay, done. Okay, then guys, what do they want? Inventory holding period. Okay, start writing that equation, guys, over there. Inventory holding period. Inventory holding period. Right, what's the equation for inventory holding period? Average inventory divided by cost of sale. Cost of sales into 365. Right, all okay now, guys, with that part. Right, then guys, let's move on to the next one. What are they asking? Debt to equity ratio. Okay, right. So guys, next one, if it's debt to equity ratio, right, then guys, it will be debt capital divided by equity capital into 100. Done. Okay, so these are the ratios that you should mark. Okay. Okay. Guys, now once you have copied all these ratios, so they are asking from you guys 5 equations. Okay, I'm trying to show it as much as possible, right? Because if I zoom out, it's not clear, right? So therefore, guys, they are asking you to calculate 5 ratios. What are the 5 ratios? These 5. Understood? Okay. Copy the equation down. Okay, guys, now can you start doing this part, guys, for me over here faster, right? Please start doing this one. Please calculate and show me the 5 relevant ratios. So don't take that much time. Okay, for calculation, don't take that much time. Maximum around 5 to 7 minutes, because we need to spend more time on analyzing, evaluating. All good, right? So online students, again, what I want you to do is this, right? 1 minute. Right, you copy the equations that is on the screen, left hand side. Understood? Right. Then by looking at the numbers on your right hand side, I want you all to start calculating all the ratios. Got it? And then those who got late to join, don't worry, I will explain what happened in this question. Now you must be again wondering, right? Why these 600 is there many places? I'll explain that. I'll teach you how we got that also. Okay, right. Start doing the equation, guys, faster. I'll give you 10 minutes. Okay, right. Copy the equation, start calculating these ratios. Right, please start calculating the ratios. Just look at the numbers on the left hand side and start doing the equations. That's it. Okay, 5 minutes. All right, start, guys, faster. If you want me to zoom the numbers a little bit more, all good. Just calculate the ratios. Okay. And also guys, online students, the 600 what I have added and subtracted, you have to adjust it and then calculate. You got it? Okay. You have to adjust it and then calculate. Huh? In 2 minutes, I'll start marking my answers. Okay. Okay, so guys, I'm going to now calculate the ratios. It will be check and see whether things are okay with you. Okay, guys, first one, right? Operating profit. Now, guys, can you see here, guys, on the screen? Profit from operation. I have done like a small adjustment over here. So you also, guys, should do this particular adjustment. Okay, so 13,160 minus 600. That should give you the answer of how much, guys? 12,560. Okay. Right. So guys, 12,560. Okay. Right. Divide the whole thing by capital employed. Okay. Guys, what is capital employed? Capital employed means equity plus non-current liability. All of these. Okay. This is what we call, guys, capital employed. Understood? Equity plus non-current liability. And also, guys, I said you last class, when it's non-current liability, it has to be what non-current liability? Interest bearing non-current liability. So here there is an interest involved, which is good. Okay, right. So add everything, guys, over there. 17,000 plus 5,400 plus 10,480 minus 600. They have given the answer, no? 32,880. Okay. Plus 14,400. So guys, the answer 46,680. All are guys okay with that part? Right. If any of my calculations are wrong, please let me know. Okay. Into 100. Right. Let's check that answer, guys. 12,560 minus 46,680. And that. Yeah, I'll explain that one into 100. Right, so therefore, guys, I'm getting the answer as 2.7% approximately. Okay, is that answer, guys, correct over there? Oh, wait, wrong. 1 minute. Yeah. Is it okay, guys? 2.7. 2.7 is okay, no? Yeah. Right, this way, let me check those answers. Good. Okay. Guys, let's move on to the next one, guys. Then operating profit. Okay, so operating profit, guys, what's going to be the answer? Profit from operation, guys, should be 12,560. Okay. No, I think, guys, there's a small issue with my ROCE, no? Yeah, 27%. No, yeah, correct. Correct. It has to be, guys, 27%. Sorry, guys, my bad. 27%. Or 26.9 is also acceptable. Okay, right. Okay. Next one, guys, divide the whole thing by revenue. Okay, so what's the revenue, guys, that we have over there? Revenue is 100,800, right? So multiply. Right. So 12,560 divided by 100,800, right? Into 100%. There's something wrong with this calculator. Now should be fine. Right. So guys, operating profit, guys, I'm getting the answer as 12.5%. Is that correct, guys? Okay, no, right? 12.5% should be the correct answer. 13 can, no problem. You can round it off and take. Okay. Right. Then, guys, over here we have the what is the other one? Sorry, it should be here. Okay. 12.5%. Right. Next one, guys, net asset turnover. Revenue is going to be 100,800 divided by, guys, over here capital employed. Guys, capital employed, I'm going to copy the same answer what I got earlier. Okay, same thing, right? So let me mark it over here. 46,880. Right. So therefore, guys, when we do this part, right, then the answer will be 100,800 divided by 46,880. Okay. So it's coming as, guys, 2.15% or 2.15 times. Correct, no, guys? Yeah, 2.15 times approximately. Right, next one, guys, over here, cost of sale. So cost of sale answer, guys, what I am getting over there is, okay, guys, average inventory. Can you guys remember last Sunday I said you, normally in FR papers, average is very, very rare. So if average is not there, you take closing. So closing inventory is, guys, after adjusting, it will become 3,360. Here you can see, guys, 3,960 minus 600, right? Okay. Then divide the whole thing by cost of sales. So in my paper, guys, cost of sale is going to be 70,600. That into 365. So 3360 divided by 70,600. That into 365. What's the answer, guys? 17.8 days. Is it okay? 17.8 days should be the answer, right? 17.8 days approximately. Right. Okay, then, guys, let's move on to the next part, guys, over here. Debt capital. So debt capital is non-current liability 14,400. Equity capital, guys, should be 32,280. Okay, how 32,280, guys? Look at this. On the paper, they are telling equity is 32,880. But then I am deducting 600, no, guys, from that. So therefore 32,280 and that into 100. So therefore, guys, my answers will be 14,400 divided by 32,280, right, into 100. So that's, guys, coming as 14,400 divided by 32,280 into 100. Right, what's the answer, guys? Is it 44%? 44 yeah, correct, 44.6. Yeah, 44.6% should be the answer. Okay, right. Now, guys, the online students, most of you are wondering, okay, what is this 600? What's happening over here? Okay, let me, guys, quickly run through that, right, before I start explaining. Right now, guys, listen carefully. I have already done the adjustment, right? Okay. Right now, guys, in this paper, this is how they are asking you to start the question. Okay, now, guys, look at this one carefully one more time because there was a small delay. Right, look at this. Required A. Adjust for information in note number 3. So first thing, when you start this paper, what you should do? You all should read note number 3 and see. Once you all read note number 3, there is a small adjustment that you need to incorporate. After incorporating that adjustment, you all can then start doing your ratios. So what happened in the question is something like this. Okay, now, guys, look at this one carefully one more time. Right. In January 2008, it was decided to discount some slow-moving seasonal inventory which had a selling price of 1.5 million. Okay, guys, see, normally selling price for this is 1.5 million. Okay, 1.5 million. Under normal circumstances, these products have a gross profit margin of 20%. That means, guys, normally these have a profit of 20%. Understood? Okay. The inventory was sold in February for 50% of what it had cost one to produce. Okay, so you have to understand, selling price is given, profit is given, but the cost is unknown. So first thing what you should do in that paper is find the cost. How to find the cost? Look at this. Selling price is 1.5 million, profit is 20%. Check 20%, profit will then be 300,000. So if profit is 300 and selling price is 1.5 million, cost is 1.2 million. Right, online students, are you all okay with how I got 1.2 million? Guys, fast, I can little bit check and let me know where things are okay with you. How I got 1.12 million. All good? Okay. Anyone unclear, you tell me. Right, now guys, listen. One corporation sold this for 50% of the cost. Now what happened is, guys, their inventory is not moving, so they took a strategy. What's that? Our slow moving products, let's sell it for 50% off. So 1.2 million cost, you're able to sell it for 50% of it. So 50% means you will get 600 and then you will lose 600 as stock loss. Are you guys okay with that part? 1.2 million, if you are selling for 50% means 50% you recovered, 50% you lost. So therefore in that adjustment, I am having a stock loss of 600. Can you please check and confirm for me? Are you okay with that one, guys? How I got that answer? 600,000 stock loss. All good, online students? We call it a loss because they sold it at a lower price. Okay, because we sold the stock at a lower price, that's why we call it stock loss. Okay, so guys, all are okay with, guys, over there? 600,000, all good, right? Okay, now guys, listen, this stock loss, how to adjust? Right, the double entry will be now stock loss, no? Right, we are selling inventory at lower price. So what will happen, guys? Inventory account will become credit minus, because we are selling at a loss. Inventory credit, because inventory now has lost value. And now if it's lost value, guys, it's an expense, no? So therefore what we are going to do, cost of sale will become debit. That's your double entry. Okay, stock loss, because normally stocks we are always marking in cost of sale, no? So that expense I'm charging it to cost of sale. Cost of sale expense goes up, loss, and inventory lost value. So therefore, guys, inventory credit. Okay, cost of sale debit plus inventory credit minus. So what did I do was, guys, once I knew the double entry, I went and now adjusted my financial statements. Why are we adjusting the financial statements? Because paper said to do that. Okay, adjust your information. So now, guys, one more time, what is a loss? 600,000. What's a double entry? Cost of sale debit. Cost of sale debit means my cost of sale is going up by 600. And inventory credit means my inventory is losing value by 600, not non-current assets. My inventory is losing value by 600. We can, not that no, but normally in FR we charge it to cost of sale. Okay, that is the reason. Right. Yeah. What happens is, over there now, when you are adjusting that cost of sale also will get automatic now. Anyway, that stock loss is 600 now. So 600, when you mark it to cost of sale, it gets adjusted over there. Okay, right. Then, guys, let's move on to the next part. Okay, guys, now look at this. Now look at the recurring impact. Look at this, guys. When cost of sale is going up, okay, now you have to see when I adjust one figure, how it will affect my other figures. See, when cost of sale goes up by 600, gross profit will go down by 600. Nothing happens to operating expenses. But because gross profit is going down, my operating profit also will go down. That's why on the screen you saw so many 600s being recorded. Cost of sale going up, gross profit goes down. Gross profit goes down means profit from operations, operating profit also, guys, will go down. Okay, now that all done. No? Right, now let's move on to the SOFP. Non-current assets don't get affected. Inventory already adjusted. Equity share doesn't get affected. Revaluation doesn't get affected. But retained earnings will get affected. Why will retained earning get affected? Guys, look at this. if your operating profit goes down, your profit for the year, profit after tax, that also will go down. If profit after tax goes down, retained earning also will go down. That's why the retained earning, we are subtracting 600 and then non-current liability will stay as it is. Right? So those who missed the first part when I am explaining, right, because there was a small technical issue today, this is what you all missed. Right? So I started off by doing the adjustment and then, marking the 600. Then you all joined and then what I did was I started calculating these ratios. Paper said calculate equivalent ratios. Equivalent ratios means what? Ratio what they have done, they want you to calculate. All good. So this is what happened, guys, so far. Right. Okay. Now, guys, what we will do is I will now, guys, be doing a small thing this way. Okay. First of all, guys, now can you start reading this question here? I never gave you all the opportunity to read the question. Now that the ratios are calculated, now let's start reading the problems of the question. Right. Read this part, guys, faster. Okay. So, guys, remember 10 o'clock we have to finish off the ratio question. Okay. We have to start income statement consolidation also. Right. Quickly read the question, guys, over here. Because Basil, in closing inventory is getting affected. No, if closing inventory gets affected, cost of sale also will get affected. Okay. Closing inventory, we are normally marking in cost of sale. No? So when inventory gets lost by 600, that will affect your cost of sale, like the URP adjustment. Okay. Inventory reduces, which will increase your cost of sale. All good. Because closing stock goes down, cost of sale is getting affected. Right. Guys, you'll only read this part, that's enough. Okay, only read that part. Okay. All okay, no, guys. So what happened, guys? Over the 2 years, our performance has declined. So directors want to know if it's our problem or if it's an industry problem. Now, sometimes, guys, because of factors that we can't control, right, entire industry itself will have sometimes a downslope, no, guys. So they are seeing whether it's an issue with our company or an industry issue. All good, right? So this much of ratio they have taken from the industry. Right, now let's move on to this part, guys, over here. Okay, now start reading for me adjustment number 1, 2, 3. Already we read, no? Okay, now start reading adjustment number 1 and 2. Okay, right, read these two, please. Third one, no need, huh? Just read and show. First and one, second one only. Okay, so guys, remember these people have a popular brand. Okay, now think. Normally, guys, brand is an intangible asset. No, guys. So if it's a brand, what does the intangible asset normally causes? It causes, starts with an A. What does it cause, guys? Amortization, right? So that's a point to note. Okay, you have a brand. So guys, sorry, if you have a brand, it works in a lot of ways. If you have a brand, you can charge people high. Brand products, no, guys. So you can charge people high. So if it's a brand, it's an intangible asset. Intangible asset causes what, guys? Amortization. So these are points that you can work with. Right, continue. The remaining 80% of the non-current asset comprises of property in which is owned and they have no directly associated finance. Okay, guys, now itself tell me 80% of the non-current assets we own. It's our own property and we don't have any finance. What does it mean? That means it's not on lease. Okay, it's not on lease. Okay, that means, guys, if we have our own property, what's the biggest advantage that we will have? If it's our own property, right? What is it? Normally, if we have our own property, guys, what will we save on? Right? Normally, guys, if we have our own property, but we will, no, that is also okay. No directly associate finance. Interest also can. Right now, we don't have to pay interest, right? Now, guys, think carefully. You all are missing a very easy point. Exactly, guys, if we have our own property, what do we don't have to pay? Rent we don't have to pay, right? So we can save on administration and operating expenses, correct, right? So we have our own property as well. So things are to note, huh? Property was revalued. Now guys, I said you last class, normally when you revalue the property, which ratio gets affected mostly, right? Normally guys, now look at your ratios, what you calculated, no, 5 ratios. Tell me, normally guys, when you revalue, what's the ratio that's going to get affected or should be spoken about? Which ratio? Right, you have 5 ratios. See guys, which ratio uses the revaluation by any chance? First question, no, it will take some time. Huh? Next week, you'll be better. The week, you'll be even more, right? So, first question, no, right? Give it time. You have 5 ratios, guys. Which ratio will be affected because you revalue? Very good. Net asset turnover will get affected. Another one ratio also, guys, will get affected. Very good, Amjad. Yeah. ROCE, exactly. Because normally, guys, what happens when you revalue, capital employed goes up. It's actually a good thing, but the ratio may not show the same thing. Because you know why? When you revalue, capital employed goes up, no, guys. When capital employed goes up, denominator is big. So when the denominator is big, the ratio will fall. It's not a bad thing, but it's just how the fraction works. Understood? So think about that, huh? Right. Next one, guys. Go to Roman number 2, will you? Right. Go to Roman number 2. Okay. In the year, Bun began offering discounted meals to customers. Bun has hoped that this strategy will help to reduce perishable inventory and reduce inventory holding period. Okay, so they have gone with a new strategy to give discounted items. Okay, now guys, everything is now done. Okay, and here we have a stock loss as well. Right now, guys, shall we now start evaluating the question? Okay, now guys, let's start together. Right, put the heading, guys, over there, part B. Okay, now let's evaluate the question. Let's evaluate performance. Okay, part B. Okay, guys, listen. I'm going to do a small chart now. That's not compulsory for you, because if it's there, it will be easy for us to evaluate. So guys, I'll write here. Okay, ratio, sector. Okay, and then guys, on the other hand, Bun. Okay, so guys, what are the ratios we started off with? ROCE, operating profit, net asset turnover. What's the other one, guys? Inventory holding, and then debt to equity ratio. Right. Now, what are the answers of the sector? So sector is, guys, having 18.6. Okay, how about us, guys? What is our ratio in that case? 27. Okay, operating profit, guys, what's the answer? This is 8.6. No, R1 was how much, guys? 13. Okay, right. Net asset turnover, they are 2.01. Okay, how about, guys, us? 2.15. Okay, inventory holding, guys, they are 4 days, but I think we were like some 17. No, 17 days. Right, debt to equity, these people are 80%. Okay, these we were some 44. No, 45%. Okay, guys, first start this way. Now in this paragraph, first you start by giving a general comment. Okay, always ratio questions, guys, when you start, give a general comment. Now guys, in the first paragraph, what is the biggest problem that these people had? They thought that our company is not performing well. So what did they do? They went and took the sector averages. Now I want you all to look at the sector averages and give me a 1-line or a 2-line comment telling whether we are overall better than the sector or not. Start writing that point, guys, over there. Okay, so start evaluating. First write that sentence and show it to me. Okay, look at the sector ratios and I want you to tell whether like overall we are better than the sector or like we are worse than the sector. Let's start writing that one, guys, over there and give the first point. Guys, listen, today's class you write bullet points. Understood? And then I'll write my answer also, so you see whether your point is there in my answer. Then slowly you can develop that skill of writing big answers. Got it? Okay, first day itself we can't write 2-3 pages, no, right? It's a process, right? It takes time. So first write guys a general comment about the overall position of the organization. Right? Let's start off guys with that way. Okay, and that part guys over there. Right. Right. So guys, see, I'll just write a comment over there, right? By looking at the above ratios of both the sector and one corporation, right? Though, right, one has been facing a drop in profitability. So guys, I'm just copying what the paper is giving me, right? Drop in profitability over the last 2 years. It's still performing. It's still performing, right? Better than the sector in all aspects except inventory inventory holding days. So guys, that's the only ratio where we are bad when compared to sector. The rest we are all good or on par. Now see guys, ROCE we are better, operating we are better, net asset we are equal. Inventory holding is the biggest problem because we are taking 17 days sell away inventory while other person is taking only 4 days. Now, some people might be confused. Debt to equity sector is 80, but we are only 45. Isn't that bad? That's good. Guys, debt to equity means what? Our debt should be lower. Okay, so 45% is a good thing over there. Right. Now, guys, you all have written about the overall comment. Okay, now, guys, let's analyze it in detail. Right, put the first ratio, guys, over there. Let's put the heading now. Performance ratios. Right, put subheading, guys, over there. Performance ratio. Right. Right, guys, I want you to start now writing about operating profit margin. Okay, start now, guys, explaining about operating profit margin. Okay, right. Guys, now you're doing well above the sector now. I want you to now start writing points. Why are we doing well above the sector? Well above the sector. Okay, what are the contributing factors? Now you saw now guys in this question, this is there. Then there are some points that you can use from here, guys, right? Okay, so therefore, guys, now can you quickly start giving me some points on why the operating profit margin is much better than the sector? Okay, let's start writing those answers, guys, over there for me. Please start commenting. Why is the operating profit better? I just want you to write some simple points. Okay, that's it. You don't need to think far. Just start writing simple lines on why our operating profit margin is better. What are the contributing factors? So guys, operating profit margin means, guys, you all can talk about what? Sales, cost of sale, administration expenses, distribution expenses, all of those you can speak about. Okay, right. Okay, start commenting on those, guys, quickly. I'll give you 2 minutes first. Okay, all good guys. Have you mentioned about the points? Okay, now guys, see, check whether these points are there in your operating profit margin. Right. The operating profit margin is above the sector. Right. Okay. The contributing reasons could be, okay, the contributing reasons could be, right, number one, right, as we have a brand name, it could be that we are charging, right, premium prices for the product sold. That could boost our revenue, right? So you know now guys, branded products always you can sell for a high price. High price means you have a high margin over there. Okay, that's the first thing, right? Second one, this ratio could also be, right, this ratio could also be, right, improved by the strategy that one took place. Okay, that one corporation took. Now guys, if you are thinking what is the strategy that these people took, this one guys, here can you see number 2, right? They took a strategy in order to discount the prices and sell. So when you sell that way, there will be a boost in sales, no guys. So when there is a boost in your sale, there will be a boost in your operating profit margin. Okay, here this strategy is what I'm talking about, right? Okay, then guys, let's move to the next part, right? The stock loss has not impacted much, right? The stock loss has not impacted much. Why do I say that, guys? Can you remember now in this question there was stock loss? No, what did we go and do? We went and added this to cost of sale. But even with that stock loss, still we are doing much better than the sector. Do you see there? Okay, so that's what I wanted to mention. The stock loss has not impacted much. Right, then guys, can you add the next point over there? Right. Right. 20%, sorry, 80% of the non-current assets are owned, meaning there is no rent cost, which has reduced our administration expenses. Okay, which has reduced our administration expenses. So guys, we don't need to pay rent, so therefore we can improve our operating profit margin, right? Okay guys, any other point? Now listen, okay, now we all see the question in different angles. Sometimes certain points that I don't see, you as a student can see that, right? If there is any additional point what you feel like you can write, you can send it to me, then I can check and let you know whether it's correct or wrong. Okay, so don't worry about it being correct or wrong. You try, right? You look at different angles. Last time when I was doing the class, many students saw things in different angles which I didn't see. So when they add that, it's helpful for the others also. So anything guys that you want to add for the operating profit margin, anything that I couldn't see, you can let me know. Then we can check on these and we can start doing. Okay, if there is, you send it to me, right? Put the next one guys over there. Now let's talk about ROCE. Okay, right, now guys, let's start marking over there, right? Let's now talk about ROCE.
How much it will affect for our
That means I didn't get you.
the non-current assets owned by the company.
That's not a problem. This is the first ratio question what we are doing now, right? The more, now for an example, if you write that, you will get like, let's say 1 or 2 marks. Maybe you can add a few more points to ROC. Usually very first ratio question is always difficult because You're never thinking in all these angles. No, the more that we do, you'll get the hang of it, right? Can you let me know next week after we do a few questions, how do you feel about this? Okay, right. All right, 1 minute. Yeah, Amjad, we can at that point, there is no issue there, right? Okay, what is the other one? Yeah, you can add that. Basil, no problem, acceptable. But usually I mean, like stock loss, we normally don't encourage, but you can write that. Done. Okay, right. Guys, now let's move on to the next ratio, right? So, guys, the next ratio that we have is now ROCE, right? Put the next heading, guys, over there, right? I want you to now put the next heading for me. ROCE. Guys, now look at this one. Their ROCE is 18.6%. Our ROCE is how much? Only 27%. So we are much better. Okay. Right. So ROCE. Guys, now look at. Now see. Now if it's ROCE, you need to talk about these things, right? Speak about operating profit. Okay. And then guys, you speak about what? Capital employed. Always guys, when you comment on ratio, break it down. So ROCE normally we focus on operating profit and capital employed. No, so try to talk about that. Tell what happened to those changes for the ROCE for R1 to be high. And also you can add any other points. Now normally guys, capital employed means what guys? Capital employed means equity, right? Plus what is the other thing guys over there? Equity plus debt, non-current liability. So try to speak about these points also as much as possible wherever that you can. All good? Okay, right guys, whatever the points that you know, I'll give you 5 minutes time. Let's start doing that one guys over there. Please start writing whatever that you know regarding ROCE. So these are the points that you can speak about. Right. For which ratio, Basil, you want to include that point? Uh, yeah, now usually cash flow issues, we should normally mention that in the liquidity ratio. Okay. That's exactly. It would be even higher. Correct. That's a good point that you can write that down. Okay, so guys, I gave you around 3 minutes. Okay, I'll start writing the answer because today there was a small delay, right? Okay, so let's start writing. Okay, check and see, guys. Okay, number one, right? Right. ROCE is much better than, right? ROCE is much better than the sector, right? Right. This is mainly due to the improvement in operating profit as discussed above. Okay, as discussed above. Now guys, listen. Now for ROCE to improve, guys, operating profit has to improve. Now operating profit is good, and we spoke about all the relevant points. Can you guys remember I said you last Sunday, don't repeat the same point over and over again. Now again, don't tell operating profit has improved because of all these reasons. Don't be repetitive. You have already mentioned it in the previous one, so you just tell according to the points mentioned earlier. Don't repeat the same thing over and over again. Okay, as discussed above. Right. Okay, then guys, you can also tell over there another one reason why guys our ROCE is less, right? The company, right, also has no associated finance to non-current assets. The company also has no associated finance to non-current asset. Okay. Now, if you are thinking, how can that lead to an improvement in ROCE? Right, guys, look at this. If they have no associated finance, their debt levels are low. Is that clear? If debt levels are low means capital employed is low. Understood? If debt levels are low means capital employed is low. If capital employed is low, in the sense, guys, our denominator is small, no? So because denominator is small, ratio will be better. That's another one reason why their ROCE is better than the sector. Right. Then guys, on the other hand, we can write over there, next one. It should be noted the business had a revaluation surplus recently. Right. If that is excluded, then the ROCE would be even higher. Okay. Because guys, remember, now see, okay, now why do I mention like that? Okay, first thing, now you know, now guys, different organizations have different accounting policies. Now you have to see, we are comparing our answer with the sector. Now we don't know whether the sector is using for property cost model or evaluation model. Okay, now let's say guys, in the sector, the people are using cost model for non-current assets. So when they use guys cost model, what will happen? Okay, when they use cost model, for them, they will not have a revaluation surplus. Whereas guys, when you take our side, because we are doing a revaluation, our non-current assets will be much higher, our equity will be much higher. So we are not really sure whether the other company is having a revaluation or not. So that's something that we need to point it out, because we don't know about the sector policy. But we are doing revaluation. Even with the revaluation, our ROC is very high. If we remove that, it will be even higher. So that's what I'm trying to say over there, because we are not really sure about the accounting policies what the sector is using. All okay now guys with that part, right? Put the next heading guys over there, net asset turnover, right? Put the next heading then, net asset turnover. Okay guys, to be very honest, over here there is nothing much to speak. Can you give me just one comment on this ratio guys faster? Okay, on this there isn't much for us to speak, so therefore please give me just one comment, right, about how we are doing when compared to sector. We both are almost same, we are identical. Okay, maybe slightly we are higher. For the ROCE, yeah, we can tell our debt levels are low. Yeah, correct. Okay, guys, little bit look at the net asset turnover answer, guys, over there. So we can tell, right, this ratio is very identical to the sector, right, which indicates that one and other organizations and other companies, like, utilize their assets in the same way to generate revenue. Okay, so guys, remember, in terms of efficiency wise, it's almost the same because both the organizations are very similar to each other. Okay, one is 2, other one is 2.1. All are guys okay with that part? Shall we now move on to the next ratio? Okay, now guys, this is a ratio that you can speak about a lot. Okay, right, now guys, I'll tell you on where you can focus on, right, once you're done with this part. Right, now guys, next one, inventory holding days. Sector is 4, we are 17. Okay, guys, now listen, we are a bakery. If we are a bakery, think about the nature of the business. Guys, should our inventory turnover days be, holding day should be high or low? It has to be very low, right? Because our products are a very perishable product. So we are taking 17 days to sell while other people are taking 4 days. Okay. So therefore, guys, can you just think and tell me, by looking at adjustment number 1, 2, 3, what could be one reason why our inventory turnover is very low? Why? But when compared to other people? Check the points, guys. Can you check and let me know one point why inventory holding days, our one is very high when compared to other people? It's there. Look at the adjustments carefully, guys. Adjustment number 1, 2, 3, right? Can you tell me one reason why that could happen? Okay, one is okay. We can tell very high competition. Okay, that's okay. Any other reason, guys? Look at the points very carefully. I can see there's another one point where we can speak on. Online students, check and let me know, guys, quickly. Okay, slow moving seasonal inventory, that also okay. Exactly, yeah, very good. Sazri and Sazri Basid Abdul Malik. Good. Okay, guys, slow moving inventory is correct, but the point what I was looking for is, guys, the brand name, right? Now, because we have a brand name, that means our products are very high price when compared to other people, no, guys. So that means our product will get sold a little slow when compared to other people. Right, so that's one reason why our inventory turnover is very high, because we have a brand, we are charging high prices, so people may not like that. So because of that high prices, our inventory is not moving at all. Because it's not moving, only we had to come up with this strategy 2 and 3 to sell inventories at a lower price, because our inventories are not moving, it will get expired, perished, right? And also, guys, you can see, though we started out on a strategy, it doesn't seem like it has worked really well, because still we are very high when compared to the industry, right? So this strategy is okay, but it doesn't seem like it's working well. Let's start commenting about those points, guys, quickly. Inventory holding days faster, right? So guys, listen, always this is ratio analyzing point, you need to always practice more and more questions. Okay, so what you do is, guys, now normally in a week I can touch maybe around 2 to 3 questions. At home, at least try to do a few more questions on your own, at least one for a day. Okay, that should be more than enough for you to pick up this analyzing skill. But anyway, let's start commenting about, guys, inventory holding days faster. Comment about those points what I said. Okay, so guys, you saw now with the bullet points itself, our answer is coming to one page. So no need to worry about the length of writing. It will automatically come when you start doing a question. Okay. Yeah, it is, but still our inventory holding is not lower than them now. Okay, they are 4 days while we are 17. So we are almost 4 times higher than them. And we sold on a loss also now this time. Okay, we sold it on a loss also. That's why it's not working well. I mean, it has boosted our revenue, that's true, but our main objective has not been met, right? That is reducing the inventory holding period. Exactly, that's the reason. Okay. Okay. Yeah, that also you can mention, no problem. Okay, right. So guys, now let me start writing the answer guys over here for inventory holding days. Okay, right. Right. One corporation has a very high inventory turnover, inventory holding days, almost 4 times higher than the sector. Okay, right. This is a very risky issue, taking the nature of business into consideration. So guys, remember, they should be selling very faster because they are a bakery. Okay, right. Contributing factors could be having a brand name would suggest high prices being charged, which may result in slow moving products. Also, our strategy to sell products at a discounted price to reduce the inventory holding days may have boosted revenue but not reduced the inventory holding days significantly. We also faced stock losses in the current year. Right. If the above issue is not addressed immediately, the above is not business will face more losses. Okay. Right. Okay. Now, guys, last part. Can you guys quickly give me a comment about this one, guys, over here? Last ratio that we have to comment is Debt to equity ratio, guys, other people are 80%, we are 45%. Okay, right, start writing the answer, guys, over there. Right, debt to equity ratio. Guys, can you directly tell me one point why our debt to equity ratio is very lower when compared to the sector, guys? Sector is 80, we are only 45, we are half. What is the main reason that we are half? Debt level is low. What is the reason, guys, for that debt level to be low? Exactly, very good. Because we own 80% of our non-current asset with no finance involved. It seems like other people are having finance, more finance. We are only having one bank loan. That's pretty much it. Okay, so our non-current assets are not connected to loans, which is why our debt equity is very low. Right, let's start writing that one also, guys, quickly, then let's finish it off. Right, so next one, debt equity ratio. Right, so I'll write it down. Okay, no, rent comes under this one, at expenses only. Okay, right, so we can just start writing. Right, one corporation debt equity level is well below the risk. When I say well below the risk, usually, guys, they suggest it to be 50%. No, guys, 50% or less. Right, which is mainly due to the non-current assets not being associated with any finance. It seems like the sector businesses do have many non-current liabilities. So, guys, remember our long-term risk is very less. Okay, our long-term risk is, though we have one loan, we are half, of the sector only. So that's a very good thing. Right. So, guys, always remember, guys, when you evaluate questions, you need to also, what you can say, you need to give a conclusion. Right. Okay. Put the next heading, guys, over there. Conclusion. Conclusion. Now, what they are trying to say is that our assets are not bought on lease. That's what they are trying to say. Okay, our assets are not bought on lease basis. We are purchasing it on our own, with our own money, not on lease. You can also buy non-current assets on lease. No, when you buy it on lease, debt levels go up. That's what they are trying to mention. All good, guys. Shall we then give the conclusion? Right. So, guys, we can tell, right. Though, right, one corporation is facing a decline in profitability, it's still performing well above the sector. Well above the sector. But they need to come up with a new strategy, to reduce inventory holding period. Okay, right. So if you want, you can write some strategies also, right? Maybe improve on their marketing, scrap the brand, right? Maybe go for a lower price brand, something like that, guys. You can, even include some strategies as well. And also, if you want, you can also request for some more information if you prefer, right? Don't write always for every question, if this is there, we can do it much better like that. But if you want, you can tell. Now, for an example, in this question, I saw that the cash position of the organization was not given. Did you see that, guys? Right now, when I go to the question paper, what is given for me is inventory only. Cash is not there. Now, cash position is very important in questions, right? We need to understand right? Into the future, do they have any working capital issue? So maybe if you want, we can write some important information like cash balances were not available, right? So if that is there, we can evaluate regarding the liquidity of the organization. That also you can write if you want, not that no. But up to this point you can stop, because their main issue was regarding the profitability of the organization, right? That's what they are worried about. That's why I didn't focus much on the cash. Okay, we are good, guys. We are 2 minutes ahead, right? Let's quickly, guys, finish off the last part of the paper. Right now, A, adjust, B, assess, and now C part, explain 3 possible limitations of comparing one corporation with sector average ratio. So they are asking, when you compare your one with the sector, what are the limitations? In other words, disadvantages of accounting ratios that can happen. Good. Start writing, guys, quickly. 3 points. Okay. So 3 marker, okay. So can you quickly write for me 3 limitations of ratios when you start comparing? Okay. No, I'm just, those are the disadvantages. Good. But the question is when comparing it with another party. Okay. Now those are the overall limitations. Correct. Check and see when comparing to another organization. Yeah, exactly. Right. So guys, the second point is correct. Okay. So guys, now when you compare one organization to another organization, okay, what's the first issue that we can have? Different what? Accounting policies. So that's one thing. Okay. What is the other thing, guys, you can tell? Right, when you start, right, comparing. Okay, I'll tell you. Another one point is, guys, different people have different ways of defining ratios. What do I mean by that? Okay, now guys, let's say inventory holding period. For average inventory, what did I take? Closing inventory. Don't know whether sector went and took the average inventory, no. So different organizations have what we can say, guys, over here. Different ways of defining ratio. So that's another issue. Now the one issue, guys, what I can point out is accounting timeline. Now maybe we are doing financial statements for December, but sector may do it later or earlier, no. Then that time when you start comparing the ratios over there, then it may not be the same. So these are limitations, guys, that we normally have when we do sector comparisons. And also you can tell other generic points like there can be errors in the financial statements, things like that also you can add if you really want, or maybe the scale of the business organization, those you can add. Let's start writing these answers, guys, over there. Yeah, once again, that is an overall limitation. Okay, not a limitation when you compare to one business to one business, right? That's the reason. Right, so guys, start writing over there. Limitation number 1, right? Companies may have, right, right, different accounting policies. Right, companies may have different accounting policies. That's number 1. Right, number 2, right, different ways of defining ratio. So what is the example for that one, guys? I use closing inventory as average inventory. Don't know whether sector actually calculate average. It is opening plus closing divided by 2. Right. Different reporting dates for financial statements. So I can prepare for December, they can prepare for March. Then when we compare that way, it's not correct. Then you can tell some generic reasons, right? May contain, right, errors, right? Open to creative accounting, things like that. Okay, right. So guys, with that one, we have now finished off our first ratio question. Okay, guys, I want just tell you all one small thing. Okay, now guys, listen. Now this is what I have planned for this month. Okay, now let's say, now currently running two batches, right? One on part-time and one on the weekdays. Okay, now it's like this, right? Any student, now I saw that in my part-time batch, there are many students who are not working. There are some students who are working, right? It's like 70 to 30 split, right? Now guys, listen, students who are not working, right? If you are a full-time student, right? I'm also conducting classes on Thursday, right? I'll show you all the timing, right? Thursday, wait, okay. Thursday, 2 to 6. Also guys, I'm running another one class on Friday also, but for that class timing needs to be little changed this month. I'll keep you all informed. But anyway, right, Thursday, students from the December batch who are not working, you're free to join this class. I have requested to share the link for the group. So now hereafter, I think the link will be shared to the revision group. So in the revision group, the link will be there. So students who are not working full time, right, you can join this class either live or maybe physically you can join. Because Thursday, I'm planning to do another one ratio question and we are planning to have a small exam on accounting standards like that. So technically, I'm planning to give you all three revision classes: Thursday, Friday, Sunday. Okay, now guys, let's say you're a working student, right? Then what you do, I would kindly suggest you to, right? Anyway, the recordings, Thursday recording and Friday recording, I have requested to upload to December batch as well, right? So if you are a working student, then what you do, I would suggest you to what you can say, check on the recording. But remember, Thursday classwork has no connection with Friday classwork. Friday classwork has no connection with Sunday classwork, because guys, after you go to work, right, sometimes you might not be able to watch the recording immediately. So therefore, me connecting those classes would be unfair for the working people. So it will always be isolated classes, right? There will not be connection. Maybe Thursday and Friday class might have a connection, but not the Sunday one. So you have time to watch the recordings also. So my plan is, guys, February, Thursday, Friday, Sunday, 3 days a week, we are going to do revision. Section A, section B, right? For a day, at least one ratio question we have to do. So for a week, if we do 3, automatically it will become 12 questions for a month. Then one day consolidated, one day income statement, one day SOFP, like that, and accounting standards will be revised here and there. Exam kit we will be doing, exam kit, then past papers we will be, like that, full month we will be doing a proper revision. So working students, if you are unable to join on Thursday and Friday, no issue at all. Please watch the recording whenever that you're free. But Sunday, as much as possible, you all come for the live class itself. Okay, so Thursday it will be a 4-hour class. Friday, most probably it will be a 3-hour class only. So you all will be able to watch the recordings before you come for Sunday. Okay, so there will be no connections with the classes. Right, Amrit, I'll keep you all updated on what are the accounting standards that I'm planning to test, so we can do that quickly. Okay, so guys, first 20 marker is now complete. Ratio 1 question done. Thursday, we'll be doing another one ratio question. Single entity once again. Now you know how to answer. So we'll be doing more. Okay, others. Right, now guys, put the heading for me. Right, those who have laptops, take the laptop and guys, go to Excel. Right, okay, start marking guys over there. If you don't have laptops, no problem. Do it on the writing book. But guys, again, I'm urging you all, right, stressing from next week, start practicing questions on the laptop. Okay, because I also will start doing it on the platform. All good, right? Okay, put the heading guys over there. Consolidated income statement. Yeah, sure, 1 minute. Consolidated income statement. Okay, Basil, your plan take screenshots, is it? All right, okay. So once you're done with each screenshot, just let me know. Okay. Others, guys, please put the heading for me. Consolidated income statement. Okay, now guys, listen. I'm going to now do a question, right? I'm going to now do a question which is not in the new exam kit. That means in 2024-25 version, this question is not there. 2023-24 version, it's there. And now I'll share this in your group, okay? The revision group, old group, new group, everything I'll share. So you will be able to get access to this question, right? December and FR October. Okay. So because I have shared 20 mark question on income statement, okay? Okay. So guys, please put the heading income statement. And guys, now can you start now setting up the format first of all? Wait till I'll tell you guys, put the heading, will you? Consolidated income statement. Start writing it that way. Okay. Consolidated income statement. Okay, now done. Right. So guys, first can you start writing this way? Okay. Right. Group. Okay, please start marking. Right. Consolidated income statement. Start writing guys this one. People I mean the students guys who don't have the old book, right? So guys, start writing consolidated income statement, right? Year ended 30th September 2006. Okay. All guys okay with that part? Okay, now guys, the structure we are not sure, so leave some space. Okay, leave like this, let's say around 40-30 lines you leave, because there's a lot of work that we have to do now. Okay, right now guys, on the side can you start writing working number 1, group structure. Okay, start marking it over there guys. Working number 1, group structure. Okay, leave a few lines. Working number 2, NCI profit. Okay, let's put the heading guys over there. Next one, working number 2, NCI profit. Right, so guys, start writing now with me. Right, subsidiary profit after tax. Okay, minus URP if S is seller. Okay. Done. Guys, always remember my method of accounting is always like this. I set up everything and keep. So with me, when you do questions starting, you might feel there's a lot of work that we are doing. If you keep everything ready guys, it's more easy. Now people who did questions with me, you know guys, right? Once things are ready, it's more easy to place quickly, right? So please do that, right? Minus URP if S is seller. Next one, fair value depreciation. Right. What is the next topic guys that we have? Minus impairment. Then that will give you what? Adjusted profit. Okay, right. Okay. Then we have subsidiary OCI. Then you will get what? Adjusted TCI. Okay, start writing this one. Adjusted TCI. Okay. So these are guys the normal workings that we have for an income statement. Okay, these are the normal workings we have for an income statement. Okay, right. So guys, up to this point all are okay, right? So guys, listen, in this paper they have first asked one income statement. So income statement means we need to copy the structure, not that, no. Then guys, we have group structure and NCI profit. These are the normal workings. This is for 15 or 16 marks. Understood? Right. Then for another 5 mark, they have asked students to calculate goodwill. Got it? 15 marks, prepare income statement. 5 mark, they are asking you to calculate goodwill. But it's not SOFP, but they are asking you to calculate goodwill. Right now, guys, start doing this with me over here. Right, this is guys actually requirement A, goodwill. Okay, right. So put over here required A. That one, Basil, not a problem. Uh, that's up to your preference. There is no right or wrong way. Okay, right. Right. So guys, mark it over there. A requirement. Now we are going to guys calculate goodwill. Okay, right. Now guys, start writing the goodwill equation for me. Investment slash consideration. Okay, right. Plus fair value of NCI. Okay, plus fair value of NCI minus net assets at acquisition. Okay, and that will give me goodwill. Okay, and that will give me goodwill. Right, all are guys okay with that part? Okay, now guys, can you tell me, look at this, now we are having a small problem. See, investment, okay, can calculate. Fair value also can calculate. Guys, net assets at acquisition. Now, normally when I used to do the SOFP, from where did I get this answer? Net assets at acquisition. From where did I get this answer? Working number 2. Exactly. Now we have to prepare a small working number 2 as well, because if not, we can't get that answer now, guys. Okay. And when we used to do the SOFP, because we are doing working 2, we can copy directly. But it's income statement, no? So working number 2, net assets of subsidiary, we are not doing. So separately, we have to prepare that also, right? Now, guys, on this side, right? Or maybe below even, no problem. Can you guys mark it over here, right? Working number 2, right? The net assets of subsidiary, right, at acquisition date, right? So guys, you mark that and keep, okay, net assets of subsidiary at the acquisition date, because we have to get this answer, to be very honest. Okay, guys, now those who have done questions, okay, now can you guys tell me, net assets means equity, no? Can you guys tell me, normally for equity in consolidation, what are things that normally comes, guys, for equity in consolidation? Normally for net assets, what will come? Online students, right? What do you think, guys? Normally for net assets, what are things that normally come? Net assets means equity. Yeah, very good. Share capital will come. Good. Yeah, share capital. And then, guys, what else will come? Very good. Retained earnings will come. That's correct. Guys, anything else that can come for this one? Yeah, revaluation. Correct. But yeah, good. Revaluation. Yes, correct, guys. Fair value adjustment. Good. Fair value adjustment. So I think now we are all caught up. Okay. Fair value adjustment. Right, fair value depreciation comes for reporting column. I mean, it comes for working number 2. I'm not telling no, but it comes for reporting column. Now we want the acquisition column. That's why we are not marking that. So these are the normal things, guys. Share capital, share premium, revaluation, retained earnings, and fair value adjustments. Okay, right. Okay, now guys, I think we are all good to go. All okay now, guys. So copy these and keep. Right. Now guys, let me share the screen. 1 minute. So guys, remember this question, what I'm doing is not there in the new version. They have taken it out. Okay. So I have shared the question to the group, because I believe that's a good question to practice, because associates are also there in that question. That's why. Okay. This is the question, guys, that we are going to do. Okay. Guys, first of all, can you please mark and show me group structure, guys, faster? Okay. Please mark and show me group structure. So guys, I want you to focus on these points, right? Just focus on the first line, okay, and this line, right? Mark and show me group structure quickly. Okay, please focus on the first line and mark and show me the group structure. Show me guys who bought whom, what percentage, timeline, number of months, everything. NCI, all of those things. Can you guys quickly mark it and show it to me? It's a normally guys income statement means those dates will become really important. So make sure you pay attention to that in your exam, especially income statement. Okay. Right. Guys, are you all done with the group structure? Okay. Very good, Daniel. That's correct. Right. So guys, see, the question starts on 1st October 2000 X5 because guys, see, it's finishing on September 6th, no? So it starts on October 5. Right. And then this question guys finishes off on 30th of September 2000 X6. All good, right? So guys, what happened? L acquired 60% of whom R, no? Yeah, Rekhood of R. Right. Now guys, they are buying on January. Can you see here guys? When you buy on January and if the question is for September, how many months are there? Only 9 months are only there during the current year. So this will become guys what you can say a 9-month subsidiary. Okay. And also guys, on the other hand, you should also note there is an NCI of how much percent guys? 40% there is an NCI. Are all okay with that part? Okay. It's a 9-month subsidiary. Guys, now listen. Once you understand that this is a 9-month subsidiary, now you need to start copying the format. Okay. Now when I say copy the format from revenue to profit, whatever that is needed, now we have to start copying one by one. Shall we guys now start copying this quickly? Okay. Right now guys, can you do it with me itself faster? Right. So start now. Okay. So guys, let's start now. First one, revenue. Okay, so how to mark guys revenue? Parent plus subsidiary. Okay, so mark video 84,500 plus 52,000. But guys, listen, this is the how many months subsidiary? Only 9 months. So therefore, for subsidiary number, you should put 9 over 12 and show this way. Okay, right. So start marking guys over there. Copy the structure. Right, next one, copy cost of sales. Right, start marking 58,200 plus 34,000 into 9 over 12. Guys, in the real exam also, you should do the same thing, only typing, right? No need to think anything else, right? Okay. Next one, gross profit. Guys, do not copy gross profit, okay? Gross profit is something that we should calculate. Don't copy that. Right, distribution expenses, copy. Distribution expenses. Right, mark that one. 2000 plus 1600 into 9 over 12. Guys, all the subsidiary values you need to mark 9 over 12. Okay. Next one guys, administration expenses. Copy that also. Right. 4100 plus 2800 into 9 divided by 12. Okay. All good. Right. Next one guys, investment income. Start marking that also. Right, investment income. Copy. Right, 500 plus 400 into 9 over 12. Okay, finance cost. Copy that also, guys. Right, finance cost. Okay, 300. That's it, guys. Profit before tax. Please don't copy. You have to calculate that and take in the exam, right? Don't copy those. Right, next one guys, income tax. Mark that one. Copy 4,800 plus how much? 3,600 into 9 divided by 12. Okay, profit for the year. Please don't copy. And guys, listen, for safety purposes, leave few lines for other comprehensive income. Okay, I'll be very honest with you. In this question, don't have other comprehensive income. But in the exam, always leave another 2 lines because sometimes other comprehensive income can come after. Now, students who did with me class on Friday, did you see? In the income statement, they didn't mention other comprehensive income. But when we are doing the question, it came. And also, guys, one more small thing I forgot to mention. My October batch students, Friday, I covered for my December batch conceptual framework, sustainability reporting, and I did a past paper on income statement. I have requested that recording to be uploaded for you all also, right? So when you're free next week, right, maybe on the 4th or something, please watch that, because guys, conceptual framework I had to cover for you, that I have explained on that class. Not much, 1 hour, 2 hours, you will be able to finish it off quickly. So please watch that recording, guys. Which students? October people. It's there in your LMS. Little bit check and see. Right. So guys, anyway, please leave a few lines for whom other comprehensive will come, because we're not sure, right? So therefore leave that line. Okay, leave 2 to 3 lines, and then guys, can you start marking now for me? Profit attributable to okay, number one, parent, and number two, subsidy, NCI. That's it for the income statement format. Okay, so guys, at 10:30 as usual, I'll give the break. We'll do until that. Okay, until 10:30 we'll work. Okay. Right. Guys, now I want you to do a small work. Okay. I want you all to read the first paragraph, and I want you to get me 4 things. I'll give you a hint, because these are first. Now, for some students, this is the first income statement you are doing with me, past paper, right? Others, second question, right? Okay, guys, in this first paragraph, I want you to find and give me 4 things, right? What are the 4 things? Number one, share exchange answer, deferred consideration answer, unwinding of discount. Okay, unwinding of discount. Okay, also guys, I want you to get me, right, unwinding, and what's the next thing? Fair value of NCI. Okay, can you guys quickly now start giving me these answers faster? Okay, I want you to calculate and give me these answers, the 4 things what I am asking. Okay, right, guys, remember, I think I can zoom maximum this much. Okay, yeah, can you please get me these answers, guys, faster? Share exchange, deferred consideration, unwinding, fair value of NCI. Okay, start doing these, please. We'll check on the URP. Okay. Guys, I'll give you a small hint. When you're doing the share exchange and the deferred consideration, you use this as much as possible. Okay. Subsidiary shares. Okay. When you do that one, guys, use the subsidiary shares as much as possible. Okay. Okay, so guys, let's do the first paragraph and then I'll give you all the break. Just give me around 5-10 minutes. Okay. Guys, first one, the share exchange. Look at this one, guys. On 1st of January, Laurel acquired 60% of Rakewood in a share exchange. So guys, remember, this share exchange is needed when a student is doing this part, guys, over here called goodwill. When you do goodwill, you need investment. No, for that you need this. Okay, now guys, start marking this on the side if you haven't done. Right. Please put the heading share exchange. Okay. Right, now guys, see how I'm going to get the answer. Right, so what they are telling, Laurel acquired 60%. So I'll write here 60%. Understood? Okay. 60% of the equity share. Guys, equity share of Rakewood is 15,000. So then let's go into 15,000. Done. In a share exchange where they issued 3 for every 5. Okay, 3 for every 5. That means multiply by 3 divided by 5. The share has not been recorded yet. Okay, now guys, listen carefully. Now 60% into 15,000 into 3 over 5, everything is good, right? But you need to calculate the value of the share exchange, right? Guys, who is issuing the share? Is it parent or subsidiary? Who is issuing the shares, guys? It's being issued by whom? Parent only issuing. So therefore you have to multiply this answer by the parent share capital, which is going to be 7. Now guys, listen, in theory class I gave you a formula like this: percentage into shares, right, into ratio into parents share price. Check your writing book and see, right? Those who did theory with me, I have given this equation for share exchange. So I am following the same thing. Percentage is 60, number of shares 15,000, ratio is 3 into 5, parent share price is 7. Okay, it's not easy, right? I am not telling calculating goodwill, especially when you do income statement, calculating goodwill can get hectic because it's two different parts now, guys, right? So therefore it's not easy, right? Okay, so guys, share exchange, can someone tell me, guys, what's the answer we are getting in that case? 60% of 15,000 and that into, yeah, so guys, we are getting 37,800. All are guys okay with that answer? It will be check and see. Yeah, correct, good, 37,800. Okay guys, then what did I ask you to calculate? Deferred consideration. Okay, little bit check and see, guys. Deferred consideration, did you all get the correct answer? Right, again, now start going through the question. But they're telling, additionally, on 31st of December 2006, guys, keep note of the date. Look at this. We are buying the company on January. They will make this payment on 31st of December 2006. That is after how many years? After 1 year. Very good. After 1 year, Laurel will pay to shareholders 1.62 per share acquired. Okay, guys, look at this. They will pay 1.62 per share acquired. We bought 60% of the 15,000 shares. Okay, we went and bought, guys, 50%, sorry, 60% of the 15,000 rupee share. Okay, guys, listen, deferred consideration. Now when I do this multiplication, I will be getting what value? Future value, right? We need to convert this to what value? Present value. The discounting factor is 8%. So what we should do, right? Guys, listen, this is a little bit of an older question now. That's why discounting factor is not given. But in the new papers, they will give the factor. So what's the factor? 1 over 1 plus 8%, that to the power 1, because we have to make the payment after 1 year. Guys, can someone let me know, guys, what's the discounting factor we need to use? Okay, please check and see, guys, for deferred consideration, what's the discounting factor that we have to use? 1 over 1 plus 8%, that to the power 1. 0.925. Okay, so guys, then we'll use that factor, guys, over there. So what's the factor? 0.925. Okay. Okay, now guys, can you multiply and let me know, guys, what is the answer that we are getting then completely? deferred consideration. 1.62. Online students, are you all okay with this one, guys, over here with the discounting factor? All good? 15,000 and that into 0.925. So guys, I am getting 13,486.5. Shall you guys round it off? Let's round it off to 13,487. Okay, let's round it off to, guys, 13,487. Let's round it off this way. Done. Okay. Anyway, deferred consideration means anyway they will be paying in the future, no? Right? Deferred consideration means anyway they are going to pay in the future. Yes, correct. Like how I got that answer. You got 13,000, how much? 500. 13,500 is shape, no problem. Okay, right. So Daniel, normal deferred consideration, how we do is like this. I'll show you. Right, they are telling Laurel will pay shareholders 1.62. Okay, so you start with 1.62. They will pay for 1.62 per share acquired. Okay, now in this company, how many shares? Always deferred consideration. What you do, go with the wording how the question says. So first they say 1.62 per share acquired. How much you bought? You bought 60% of the company. 60% of how many shares? Subsidiary has 15,000 shares in their organization. So multiply by 15. So when you get this, that's the future value. The normal deferred consideration, we don't take future value. No, we always take step number one, but present value. That's how I got that answer. Okay, 13,487. Now, are you okay with that part? How we got that one? Okay. 14,580, Daniel, will become the future value. Now, when we need to take the present value, no, so we have to multiply it with the discounting factor. Okay, that's why we are going with 0.925 with the discounting factor. Okay, no, right, okay. Guys, now you know how things work, no? Now, normally, once you get the deferred consideration, that's the future value. So, first we have to take present value. Now, after we take present value, guys, always what we need to do, we need to then find the unwinding of discount. Okay, right now, guys, can you all open a separate working? Because, guys, listen, unwinding part will not affect goodwill. Okay, because in goodwill, you should show at the acquisition date what's the deferred consideration. Unwinding part will affect our income statement, right? Can you guys open a new working for me? Working number 3, unwinding of discount. Okay, unwinding of discount. Okay, we have done this, right? Unwinding of discount. All good? Okay, guys, listen. Exactly. How do we get unwinding of discount, guys? Present value into percentage. Correct now, guys? Okay, present value into percentage, right? Now, guys, you all calculate present value. Now, can you check and see, guys, what's the present value that you all got? 13,487. Start marking, guys, over here. 13,487 into percentage, guys. What's the percentage? 8. Put 8. But guys, listen, don't make a mistake. Listen, how many months subsidiary? These are 9 months subsidiary. Then put this into 9/12, because guys, you should understand unwinding is interest, right? Interest we should only calculate for the relevant accounting period. So from January to September only we have to calculate. So you have to take that into 9 months. Check and see, guys, what will be the answer in that case. Right, people are getting 809.2. Shall we, guys, take it as 809? Okay, start marking, guys, over there. The answer is 809. Okay, guys, now listen. 809 is what? Unwinding. Unwinding is similar to interest. Because this is similar to interest, can you please go and mark it inside finance cost? Can you guys go and add it over there? Plus 809 inside finance expenses. Please mark that over there. All okay now guys with that part, right? Unwinding of discount. Okay guys, last part and then I'll give you the break. Guys, I also ask you to calculate fair value of NCI. Okay, right now guys, how to calculate fair value of NCI? This equation also guys I gave to you all in theory class. Okay, now guys look at this. Now if you are thinking how to know that, anyway listen, in this paper guys, anyway they are telling, look at this adjustment number 2. Laurel's policy is to value non-controlling interest at fair value, right? For this purpose, Rakewood share price on 1st of January 2006 can be deemed. Okay, now guys, they are asking you to calculate, but you can say guys, fair value of NCI, this one. Right, now guys, in theory class, I gave you an equation this way. Can you guys mark this on the side quickly? Okay, what is the equation for fair value of NCI? Fair value of NCI equation guys like this. NCI percentage into shares in subsidiary company into subsidiary share price. This is the equation I gave for you all in theory class. Copy this down quickly. How to find fair value of NCI? NCI percentage into subsidiary number of shares into subsidiary share price. Now if someone is thinking, why are we taking subsidiary shares and subsidiary share price? Guys listen, NCI is the owner in which company? Subsidiary company. That's why we are taking subsidiary shares and subsidiary share price. Okay, right now guys, those who didn't do that earlier, right, can you guys now quickly do this and show it to me now? Read the first paragraph, get me that answer. Fair value of NCI. Right, Rifki, the credit entry goes to deferred consideration credit. When you are preparing the SOFP, you have to add that with the present value and show. All okay? Right, for 13,487, you have to add the 809, then only the credit entry will be completed at the SOFP. And please find fair value of NCI. Okay, guys, NCI percentage, how much gets in this question? 40%, correct or wrong? Okay. Guys, subsidiary has how many shares in their company? 15,000. From where did you get 15,000 here, guys? Same thing what you used earlier. Say equity share, Rakewood has 15,000. Okay. Guys, last part. Subsidiary share price is how much? $2. Can you see here, guys? Subsidiary share price is $2. Okay, so multiply by 2. Okay. Can you guys tell me then what will be the answer? 12,000. No, guys. Yeah, 12,000 should be the answer. Correct. Okay, guys. Now mark 12,000 over here faster. Fair value of NCI. Please write here 12,000. Okay. Please write 12,000 over there. Okay. And also, guys, can you do a small thing? Can you add these two considerations and also mark it here, guys, faster? The share exchange and the deferred consideration. Please add these two and write it over here as investment. This and this, can you add? Please add these two. Okay. Right. So guys, when you add these two, guys, what is the answer we are getting? 51,287. No, 37,800 plus 13,487. Yeah, no guys, 51,287. Yeah, 51,287. Correct. Okay. How did we guys get that answer? This one plus this one together only I have taken that answer here. Okay, as my total investment. Right. Okay, guys, now the time is 10:45. Have a half an hour break. Come back at 11:15 and then we will resume this question. All good? Okay, have your break, guys, faster.